Alright, hello everyone, this is DayTraderRockStar, and just an educational video here. We put a couple short setups out there last week, and one of them was the Apple short, and it was just a perfect textbook short. I wanted to go over it and just break it down because I think it's an important short setup to have in your arsenal to find other good short setups. Now, just to go back in the history of Apple, Apple had this kind of a falling wedge pattern, which we broke out of. Stochastics got up into an overbought area. We pulled back, but we weren't really looking at that. What we were looking at was this first breakdown of this just mini little. What I want to do is what I always talk about is a little breakdown of a trend line here. Now, this trend line could go either way, so we're going to actually going to put this trend line just like this. Oh. All right, and this was like the real first trend line break here. And when I see a trend line break, I always look for that first retracement to the 20-period moving average. Now, I use a series of 3 moving averages: 20, the 50, and the 200-period moving average. I don't get complicated on that. I don't believe in making things more complicated than they should be. The 20 EMA, the 50 EMA, and the 200 EMA, exponential moving averages. Not the simple, but the exponential. That combined with the stochastics and some other chart patterns like these flags are usually all you need to see these setups, and what you need is just follow through on them. Even if you don't follow through on them, they're always great to find and follow even on paper. That way you develop your confidence. So a breakdown of a trend line, a short-term or medium-term trend line. A trend line is developed when you have 2 points that come back down. You could draw a line and then follow that line up. Really need 2 points to make that line. 3 points to confirm that trend line. And once that breaks down, again, that could be a short trigger, but it's also could be a very dangerous area to get in. So you always want to let the short play out and let the retest of a move up, and that's usually the 20-period moving average. And in here you can actually see it was kind of, we actually pushed up here against the 20-period moving average, and then kind of fell back, but we didn't break it down. It was really fighting here with the 20-period moving average. And in some cases we actually tried to push above the 20, but never really closed above it. But as the pattern developed, you could actually see the a bear flag start to form here, and a bear flag is just to consolidate, a small little flag consolidation, little rising flag here off of a flag pole. Now, when they talk about a flag, the reason they talk about a flag is the whole concept as a move up would be the flag pole, or move down, and then a little consolidation or a sideways action would be the flag, and it basically looks like a flag. All right. So you see a little flagging here, and what was the key indicator here was the stochastics. Now I usually watch this 40 level on the stochastics as an area of support, actually strength. And if the stochastics are actually staying embedded here, in this case they were staying below the 30 line, and the stock market, the stock in question was actually just kind of grinding up. There was showing some upward movement here. I mean, if you could look at the 87 level, and we moved all the way up to around the 92 level. It was slowly, chopping in this area, but forming this wedge pattern, but not getting any action on the stochastics. So that was telling me there was some more pressure coming in here. So it was just a matter of time before everything was set up here. You knew the stochastics weren't lifting, and you knew there was more pressure here. It was a perfect bear flag, and you just waited for that drop here. And on Friday we had that beautiful drop. Even though we got a rebound here off of this, the flag dropped, and look where it came down to. I mean, talking about a gap fill here. There was a gap right down here. You can see it on the chart here. I'm just gonna around that 82, 87, but it came down, filled that gap, as you can see, with the shadow here, and then rebound right up. And that's always an area of, you want to always sell or buy into areas of support and resistance. Don't always go for that home run. Talk about this every day on the radio show. You don't have to hit that home run every day. Just always get into the discipline of taking profits off the table as your move plays out. Look at the areas of support and resistance, and sell and buy into those areas. So great short setup. It played out perfectly. Definitely just wanted to bring that one so you could actually mark that one down and just remember it, put it in your arsenal to use, because this market, the shorts and longs, you need to know how to do both sides of the market. And basically what we do, that's what we do. All right, so that's it. Be sure to join me each day at daytradingradio.com, where I broadcast the markets live, tick by tick, pattern by pattern, and just bring all these setups to your attention, live with the live audio and live video, and it's all free for you to listen and see. So definitely check it out. I'm DayTraderRockStar, and I'll be coming up with a couple more videos today, so stay tuned.